Hello, everyone, and welcome back to another episode of the Let's Get Technical series. I am Kavita Agrawal, the founder of EXP Invest, and like every Wednesday, I am here to answer your stock queries. So far, around 8 people have come forward with their stock requests. They filled up the form. If you also want to fill up your form, you can just head over to this link right above my head and submit your request. But what I will do is I will walk you through these stocks, their charts, and I will also take you through the concepts that I'm covering, and I'll try to talk about them in as much details as I can while limiting the overall time of the video to less than 45 minutes. It doesn't exceed or become a big charge on your time. So the focus will be on knowledge sharing as well as adding value to the people who have asked for the stock analysis. So without any further delay, let's get started. So as you can see on my screen, the first stock of the day is HFCL. HFCL, his cost price is 150. So clearly, Rishabh, you have not maintained your stop loss because 150 was 23% away. So Rishabh, here you are clearly showing a major psychological bias as a trader, that is loss aversion bias. So I don't remember exactly what stop loss level I had given you last time, but unless it gapped over it over here with this this thing, I would understand. If it gapped over, that would be a separate issue. But if you were relying on probably manually exiting your position when the stop loss came, you need to understand that doesn't work, because when the stop loss level actually comes, and if you need to manually execute, what happens, the price keeps fluctuating slightly above, slightly below the stop loss. So your hope starts to get triggered, and you will start thinking that, oh, the stock might recover, so I will sell at a slightly higher price. And even if it does temporarily recover, you wait for more recovery, ending up not really selling. So when it comes to proper risk management, you have to be very disciplined, and the best approach is to use standing orders like good till trigger for setting your stop losses. Later, if the market revives and the stock starts going up, you can always compromise a couple of percentage and enter higher. But it's very bad discipline to not maintain your stop loss or depend on manual exits. Having said that, what is HFCL saying now? So on the 15-minute time frame, what I am seeing in HFCL is the stock has given a very clear-cut topping out signal, and on the 15-minute time frame, it has gone down into what I call the bear range. Why would I call this a bear range? Because the level of 60 is acting as a resistance. Now, RSI is saying that the momentum is bearish. The price is also agreeing with that. Now, I'm not sure why you have entered around 150, because what I can see on the 75-minute time frame also is a massive negative divergence on the 75-minute time frame, which was a very clear-cut signal that momentum is getting exhausted here. But since you already have your position, what should you do next? Here, the stock has corrected between 50 to 62% retracement level, and the 250 EMA, which is this dark blue line over here, 250 EMA of the daily time frame. Even though this is a 75-minute chart, the EMA belongs to the daily time frame because I have superimposed it on the 75-minute time frame. I can see that has acted as a very good support here. Let's take a look at the daily time frame before further adding to anything else. I want to read my trend lines here. So give me a moment. So what I can see is that the stock has unfolded into two waves, and if we conduct a quick Elliott wave count, I would expect another wave to unfold. So this position, for you to be honest, no longer remains a short-term position. It becomes more like a medium-term position where you're holding the stock for a significant amount of time, and which stretches well into months. Like typically for a short-term period, we'd expect to hold the stock for a few days to few weeks. Here, you can expect to hold the stock for a good, let me tell you, this is the bare minimum, that's 3 months, anywhere between 3 to 6 months, right? Since you've already committed to it. What I would suggest here, this 250 EMA seems to be acting as a pretty good support. And let's also measure quickly the first rally that had unfolded. That also corrected around 52%. Again, the stock is somewhere there. So I think you should maintain a strict stop loss here below the spike of 105.77. And if you've not allocated more than 8% of your total portfolio, then you can add more here. But if you've already allocated 8% of your capital, then I would suggest refrain from adding more capital. And I don't mean the value of the current investment, the value of your original investment. Make sure it's not more than 8% because then you don't want overexposure also here. So let's just remove this and clean up the chart a little bit. Like I said, your stop loss will be around 105.77. And your target here, you can expect from a very short-term perspective, I would expect the stock to at least test this resistance around here, 136 rupees. The risk-reward ratio is not attractive. So anybody watching this video and thinking you can make a fresh position in HFCL, not recommended right now. The second target, however, is around 185 rupees in the stock. Let's move on to the next stock, which is Reliance. So your average cost is around 2,900. Again, that is a little bit on the higher side. I can see you probably saw this support and thought the stock might recover from there, but that didn't happen. Entered for the bonus with a long-term view. Is the entry price good, or should I average to sell the initial quantity on rise? Is it good for investment? Okay, so first of all, see, there was a massive negative divergence on the daily time frame right here. So this should have been your indication to wait for the stock to retest around the level of 30 on the daily time frame itself. Right? Since you did not do that, you are now sitting on an unrealized loss of around 7.5 to 8% in a stock like Reliance, which is a pretty big loss, to be honest. However, I think the underlying trend in Reliance is very strong, and it is very close to this trend line, which I have drawn on the weekly time frame, which captures the trajectory of the Reliance stock very well. So if you look at this entire chart, let me move to the 5-week time frame and squeeze it in. So you can see how well the trend lines that I have drawn captures the trajectory. And right now the stock is very close to this support trend line. And I personally don't expect this trend line to break whatsoever. So I think from a long-term perspective, the purchase is good and you can continue to hold on. From a medium-term perspective, over the next 5 to 6 months, I would expect Reliance to rally back up and test this resistance trend line, this one again, right? So you are well placed, and long-term, if you can hold on to the stock, then I'm expecting a much sharper rally in Reliance here. So I would suggest you to continue to hold on to the stock. One major positive development here, which I also mentioned in my market commentary, analyst commentary that I post on my Telegram channel every day, is that here on the 75-minute time frame, Reliance has forged a beautiful positive divergence. This is also the reason why my conviction that the market is very close to a bottom is quite high. And today being Wednesday, I can see the market is already quite positive. So that is what I would say, that Reliance is not a bad purchase whatsoever. You should definitely continue to hold. However, what should your stop loss be? So I think this previous peak should not get breached. And if it does get breached, it would mean that your trendline support has also been breached. So if I place a stop loss there, you can see it leaves a pretty good buffer from the trendline support around 2.5%. And it also adds buffer to the peak, which should ideally act as a strong support for you. So 2.7, let's round it down to 2.570 is a good stop loss for you to maintain, and a conservative target for the medium term would be 3,300 for you. Now let's move on to the next stock requested by Satvik, which is Titan. So Satvik says that he currently has around 310 shares brought through MTF. For those who don't know what MTF means, it means that he's bought it against margin. So margin trading fund. Average cost is 3,627. 3,627. So somewhere around here, 7. So that yellow line is the average cost. All right. So you want to hold it for short-term horizon, and you've bought this stock on margin and you've allowed the stock to fall 10%. Satvik, you really need to work on your risk management. If you're not managing your risk, this is not FD investment. You have to manage your risk. There's no two ways about it. First. Second, let's look at the analysis. Now let's talk about the daily time frame first. Okay, so here I can see that there was clear bull momentum, but up to the date of 16 January 24. How do we know the bull momentum subsided? Because the stock created a very clear double top against a massive negative divergence. So here you can see the RSI was well above the level of 70, indicating that the momentum was still strong. But then what happened? The RSI went into a correction. Even though the price came back to retest the same high, the RSI continued to resist the level of 60, right? This was an indication that the underlying momentum in the stock is not strong and further correction can occur. Right now, based on this analysis, what I'm seeing is that on the 75-minute time frame, the RSI has breached the level of 30 twice. The recent peak where the double top was observed, there again on 75-minute time frame, negative divergence has also been forged, right? So here I personally tried an entry, but I was immediately stopped out because of strong risk management. Why? Because the stock failed to sustain this bounce back from this blue EMA, which was my 250 EMA, right? The reason, now I don't know the reason why it failed to sustain, but the fact that it failed to sustain was enough for me to book a small loss and get out. It's very important to keep your losses small in the market if you want to survive, because the fact is that if you survive, only then you will thrive. You cannot thrive in the market if you don't have money. That is, you fail to survive because you fail to manage your risk. It's very binary. There's no two ways about it. Another thing is, if you look at the volume here, this is the histogram. Okay, so on the 75-minute time frame, I am comparing the 100 period volume against 50 period volume, and applying a signal smoothing of around 50 period. And this is based on EMA calculations. So what this is telling me is that the decline that has happened is happening against pretty high volumes, or at least the first leg of the decline happened against high volumes. Now the volume of the decline has reduced, right? It has reduced. Typically what happens is that when the price is trending against high volume, it means that the trend is strong and is likely to continue. But when the price trends in one direction with weak volumes, that is an indication of a potential reversal. When the price peaked out or retested its previous high, if you look at the volume, you can clearly see that the 100-day or 100 period average volume was clearly below the 500 period average volume, which again was a signal that the uptrend that we're seeing, that is leading to the retest of the previous high, is not very strong, and we soon saw a correction continue. Okay, now coming to your position. Honestly, the 15-minute time frame here is trying really hard to be positive, but as you can see, the positive divergence it gave fizzled out with a test of the level of 60, and the stock does continue to remain pretty bearish. I have no reason to ask you to hold on to this position right now. There is, in my opinion, no indication of strength coming back just yet, except for the fact that the double trend line that is present here has potential to act as a strong support. But to some extent, I'm seeing even the trend line get breached. So if you look at the correction that ended on 30th June 2022, that was also preceded by a very similar formation, except in that case, instead of double top, there was a triple top formation, and the stock did retest the 500 EMA. There was also a massive negative divergence, just like the one that we are seeing right now. Typically, when a negative divergence occurs in any time frame, the realization, in my opinion, okay, there are a few caveats to this, but talking specifically about RSI negative divergence, right? If it's the end of a primary wave or a major wave correction, then the RSI negative divergence should be played out till the level of 30 has been tested on the RSI or whichever time frame it has occurred, right? But sometimes stocks also give intermittent negative divergences. And how do you know whether it's an intermittent or whether it's an end of the rally negative divergence? Two differences. One, if it's end of the rally negative divergence, right, you will see probably a double top or a small higher high in the price, and More importantly, the right hand side of the tip of the divergence will be very close to the level of 60, right? But if it's an intermittent RSI negative divergence, which is going to indicate a small correction within the larger trend, then typically the right hand side of the RSI negative divergence will not be very close to the level of 60. It will be lower than the previous RSI peak, but not close to level of 60. It will be higher, typically 65, 70-ish, right? So this was a very clear indication that boss, end of the rally, correction is happening. And this was a pretty deep correction. Here also, I am expecting a much deeper correction. I am expecting the level of 30 to get tested. Because see, the previous correction, the previous top that you saw, this one, right? So here you can see this RSI negative divergence, the right side. So this is the negative divergence, right? This RSI peak is lower than this RSI peak, but this price peak is higher than this price peak. So this negative divergence was a intermittent correction kind of a thing. So it corrected, but we saw another rally. Now the fact that this peak has again caused a negative divergence and this time it is closer to 60, I would definitely expect this to go lower than this low. So another 8 to 10% correction I definitely expect in Titan. So I would not recommend you to hold on to your existing position in Titan at all. So the next stock is IDFC First Bank, and we have this request from Saikaran. Saikaran writes that he bought the stock at 80 rupees and right now it's significantly lower. From your purchase price, I can see the stock has declined around 17% already. Now you don't want to average the stock any further. That is good. All right. Let's see. So again, basis the momentum analysis, I can see strong momentum was clearly evident up to this point on the chart, which was up to the date of 21st of September. And then the stock gave a very clear-cut negative divergence on the daily time frame and moved into the bear range. So I'm not sure what was your motivation behind entering the stock, because there was a clear lack of a bullish momentum there, then and there. Also, the stock was retesting the 250 EMA and not able to sustain it. So not a very good purchase. The stock is clearly in a downtrend right now. If I may draw another channel here to capture this downtrend, what would I see? So right now it is retesting. I think you might get a short-term opportunity to exit the stock somewhere around the level of 8-7. I think you should take that as a target and you should book your loss and get out of the stock, because the underlying trend here is not strong whatsoever, right? Until and unless it establishes a strong trend. And mind you, IDFC First Bank is a very cyclical stock. What do I mean by that? If you look at the price trends that have unfolded in the stock since 2020, you will see the stock rallied 2.6x in a year and then it corrected 55% in the next year. Again, it rallied 2.3x in a matter of around 1.2 years, and now it's on the way down. So this entire correction, if you see, it's been going down, retracing, pulling back, going down, pulling back, going down, pulling back. So right now, since for a while, the stock has declined quite a significant amount of around 21% without any pullback, and it is close to the trendline support. I would expect some pullback to happen here. So you can hold on to the stock, but make sure you exit around the level of 70, 75, 73 to 75 rupees range. On the other hand, you should also maintain a stop loss at the level of around 62. And I wouldn't recommend a fresh entry at all in IDFC First Bank. I wouldn't recommend you to even add more. As for your second request, that you want good investment advice, for that, I would recommend that you join my long-term trading plan or my Trade Together program if you want stock recommendations. You can just get in touch with my team and we'll let you know how to go about that. But with respect to this stock, 75 rupees, and on the downside, around 62 rupees would be your stop loss. So Pranay is asking for the analysis of this stock MANINFRA, and he says he want to do short-term swing trading here. So here's what I think. If you look at the weekly time frame, this stock is in uptrend but currently experiencing some correction, right? The underlying trend continues to remain strong despite of this correction. But since you want to do short-term swing trade, let's take a little bit of inspiration from, say, the daily or the 75-minute time frame. Now, the daily time frame is suggesting that there is a lack of momentum, which itself is a red flag. But coming down to the 75-minute time frame, I can see a small positive divergence has forged, and this kind of triangle pattern that the stock has forged, it seems to be close to a potential support level here. So what you can do, I'll give you two scenarios. Number one, you create a position now around 180.5 with a stop loss of around 30. Now that clearly, as you can see, is a 5 or 6% stop loss. What would your target be? Here, I would suggest a short-term target of around 220 rupees. This gives you a pretty attractive risk-reward ratio of more than 3. Okay, so 220 would be your target, 170 would be your stop loss. Scenario 1. Scenario 2 would be you wait for a breakout above this triangle pattern. So you wait for the stock to breach above the level of 196, and then you set your stop loss at the level of around 183, right? Basically the low of the triangle pattern. And then your stop loss would be 220. So in that scenario, your risk reward ratio will not be as attractive as the first case. In fact, it won't even be more than 3. But I think if you wait for the formation of a legit higher high, then you can actually also keep your target at the level of 205, improving your risk reward ratio. Why would I suggest a higher target? Because right now the stock is in a pattern where it is forming lower highs but not lower lows, right? So if it does give a breakout, we would expect at least one higher high formation. So since the immediate high above this high would be 220, I would expect this to get breached and the very previous high to get tested, which is around the level of 245. So I hope that logic makes sense to you, and you can, depending on your preference, choose either of these two setups to do short-term swing trading in MANINFRA Limited. Let's move on to the next, which is Adani Enterprises. So Vinay ji has requested this. He has an average cost of 2,900 and he wants to know whether it is likely to cross all-time highs. Honestly, I am not a big fan of the Adani group of companies. I don't prefer to trade in there because of the very, very high retail participation. I don't understand the obsession of the retail traders with this stock. And also, I find the price trends pretty low quality. Also, I am not comfortable with the corporate governance here. And my personal opinion about the stock is short-term negative. So I think ever since the negative news in the stock has come out, this entire movement, I don't trust it. I don't like it. I don't like the volume activity here. It's not consistent. It's very jagged. It's almost like being operated, in my opinion. And right now, I think the stock is in a downtrend. So my overall recommendation for a stock like Adani Enterprise would be that it's a very low quality stock, very high risk stock, extremely volatile. And my recommendation to you would be to stay away from this stock. Do not trade. So the next stock that we are assessing is KNR Construction. And on the daily time frame, what I can see is that the stock is definitely in a bull trend, but within the bull trend, it is experiencing some downward correction. So the negative RSI divergence that we are seeing here, or the RSI negative divergence that we are seeing here, is intermittent correction within a larger bull trend. So quickly, let's draw Fibonacci and get a sense of how far we've already seen this correction cut into the previous rally. So it is right now at a 62% retracement level, and it is between the 250 and the 500 EMA, the dark blue in the gray line. Coming to the 75-minute time frame. Now the problem is that the 75-minute time frame has not turned bullish yet. So here we have Bhupender ji, who has an average cost price of 370, so almost close to the very peak. So since then, the stock has declined a massive 25%. The stock is definitely expected to recover, Bhupendraji, but you're going to have to be patient. Okay. So here you need to wait for at least a 25% rally to just break even. But the good thing is that I am expecting the stock to test the level of around 420. I would say 420 in the next leg of upside that unfolds. However, I will recommend you to please use a stop loss, even though the underlying trend looks bullish and it looks like the market is also on the path to recovery now. I would recommend you to use a stop loss at the level of 273 rupees. Basically, if the 500 EMA also gets breached and the trend line support here also gets breached, it will be better for you to free up your capital and make better investing choices with stronger risk management. So, with that, I come to the end of this episode of the Let's Get Technical series, where we've discussed the stock requests submitted by members. Let me just go through the list. We have discussed HFCL, Titan, Reliance, IDFC First Bank, MANINFRA, Adani Enterprises, and KNR Constructions. If you have stock requests that you'd like me to take a look at, comment on basis momentum and volume analysis, tell you the stop loss target, whether it's a good idea to buy or not, or if you just want to make fresh entry in stocks and want an expert's opinion, go ahead, fill up the form, and let me take a look at the stock and share my opinion with you. So I will see you again in the next video, which will come out on the Market Outlook series on Friday at 5 p.m. So stay tuned for that and make sure that you subscribe to my YouTube channel. Also, if you want to connect with me and if you want to know more about how I can help you with my expertise in the Indian stock market, in swing trading for short term and long term in the cash segment. Again, cash segment focus. I don't do any kind of margin trading or pledging of shares or options and futures, God forbid. But if you want help with swing trading in the equity segment, then definitely connect with me and my team. The link to my Telegram channel is going to be present in the description for you to follow. So please, if you've found this video, make sure to give it a thumbs up and subscribe to my YouTube channel. I will see you in my Telegram channel where we can have better conversation. So thank you so much for joining in.